A good late afternoon or perhaps early evening to you, and thanks for joining us. I'm Holly Shields and you're watching 𝐊𝐿 TV live from Sydney. This is the last show of the day, the last trade. There's no better way to wind down the day than with today's market close commentary. So let's dive in. Australian shares closed higher in a volatile trade on the back of smart recovery in the final hour of the day's trade. Gains in blue chip mining and healthcare stocks offset losses in energy and telecom shares. The market remained under pressure today as the country's two largest cities, Melbourne and Sydney, went into lockdown to break the chain of the growing COVID-19 pandemic. The S&P ASX 200 ended 12.20 points higher, or 0.17%. Earlier today, the benchmark index opened lower and declined as much as 0.3% to hit a low. Over the last 5 sessions, the benchmark index gained over 1%, and among the individual stocks, coal miner Whitehaven Coal was the top percentage gainer on the ASX pack, rising 4.3%. Meanwhile, gold miner Evolution Mining was the top loser, falling over 5%. Let's see how the sectoral indices performed today, and the market breadth indicating the overall strength of the market was positive, with 6 of the 11 sectoral indices ending in green. The consumer discretionary was the top performer with a 0.55% gain. And among others, healthcare, A-REIT, industrial and material were the notable gainers. Meanwhile, the energy sector was the worst performer with a 0.65% loss. Among others, telecom, utilities, financials and IT were the top laggards. IT staged a smart recovery and closed marginally lower, pairing the early losses. In the tech space, Afterpay and fellow buy now, pay later companies closed with a sharp weekly loss as concerns over rising inflation as well as the fear of competition from global players spooked investors. The sell-off was triggered by the news that US digital payments giant PayPal had launched a fee-free installment payment product in Australia to take on the homegrown BNPL firms. Adding to the woes, global tech giant Apple Incorporated is also planning to enter the BNPL space in partnership with Goldman Sachs Group. And in the energy space, index heavyweights Woodside Petroleum, Ampol, Santos and Oil Search all ended in the red. The ASX-listed energy stocks have been taking cues from the oil prices that declined for the 4th straight session on Friday because of the supply worries. Plus, OPEC is likely to add more barrels amid anticipations that demand is returning as more countries have recovered from the pandemic. In the mining sector, index heavyweights BHP Group and Fortescue Metals were among the top gainers. But bucking the trend, Rio Tinto closed lower after reporting a production slip at its Pilbara operations. Among the gold stocks, sectoral major Ramelius Resources, Newcrest Mining and Chalice Mining ended lower. In the banking sector now, all of Australia's big 4 lenders, that is Commonwealth Bank, ANZ and Westpac, as well as the National Australia Bank, ended negative terrain. Moving on, let's have a look at the ASX stocks which created a buzz today. Got milk, shares of Ketone Dairy Corp rose as much as 11% to 15 cents on securing a debt financing facility. The dairy product manufacturer said ANZ has provided $1 million New Zealand dollars in trade finance facility for the New Zealand dairy business. It's increased the total available debt financing in New Zealand to $3 million. The company has added that it also secured a trade debtor finance facility of $7 million with Moneytech for the Australian contract manufacturing brands business. And shares of space and defence tech firm Electro-Optic Systems gained as much as 4.9% to $4.25 on bagging Australian Defence Force contracts. The company has been awarded contracts worth $20 million from the Australian Defence Force last month. The contracts will be delivered over the next 24 months under standard payment terms. Well, now to a quick break, but stay tuned with 𝐊𝐚⁴ TV.
Hi, this is Andy Liu broadcasting from 𝐊𝐚⁴ Media Studio in Australia, and I'll be hosting the new 𝐊𝐚⁴ Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐚⁴ TV and join me.
Welcome back from the break. I'm Holly Shields and you're watching 𝐊𝐚⁴ TV live from Sydney. This is the last show of the day, the last trade. We're discussing stocks that remained in the news today. Another tech player taking the L, shares of Buddy Technologies tanked as much as 46.5% to 2.3 cents on Friday. The cloud-based data management platform has received firm commitments for the placement to raise $6.5 million. The new shares were offered at a 41.9% discount to the last closing price of 4.3 cents on the 23rd of April, after which the trading of BUD securities was suspended. And it looks like cybercrime has reared its ugly head again, this time impacting the shares of kitchen appliances distributor Shriro Holdings. The share price paid the price indeed, slipping as much as 7.4% to $1 as the cybersecurity incident impacted their system. The company stated it has faced the potential cybercrime incident involving unauthorized access to its operating system. Shriro has notified the Australian Cybersecurity Centre and engaged a cyber forensics firm to conduct an investigation. But the losses don't stop there. Gold miner Evolution Mining saw its shares tumbling 6.5% to hit an intraday low of $4.63 after the company missed its gold production target. The stock was among the top losers on the ASX pack, and for this year, the company reported operating mining cash flow of $937 million and net mine cash flow of $555 million. The gold miner said it achieved group gold production of 680,000 ounces this year, with 2% below the bottom and revised guidance. And it's not all fun and games anymore, as the share price of Crown Resorts declined as much as 0.9% to $10.90 after the Australian largest gaming and entertainment group issued an update on business operations. In an exchange filing, the company said it had closed its Melbourne gaming, retail and dining facilities during the state's 5-day lockdown. The hotel facilities, however, will continue to remain open. And another company taking the plunge is Rio Tinto, whose share price fell as much as 1.5% to hit an intraday low of 129.13 Australian on subdued performance in June quarter. The metal and mining giant has raised its full-year iron production cost guidance amid a spike in labour and input costs. The mining major also reported a fall in its quarterly shipment due to higher than expected rainfall in the West Pilbara region. And a mix of good and bad news for AMP, whose share price dropped as much as 1.8% to $1.09, even after confirming that the National Corporate Regulator will take no action against the company. The financial services company said that the Australian Securities and Investments Commission would take no action in relation to either the processes or reporting of the historic fees for no services conduct associated with AMP's buyer of last resort arrangements. And it seems there's no slowing down the Kiwis when it comes to travel, as the share price of Auckland International Airport rose nearly 2% to $7.16 after the company released traffic updates for May. New Zealand's largest and busiest airport expects recovery in international passenger traffic by the year 2022. And the airport reported a staggering 747% growth in total passenger volumes in the month of May compared to the same time last year. According to the company, services for May were also upon the prior year, indicating a surge in domestic activity and international passengers transferring to domestic flights due to the border closures in the way of COVID-19 pandemic. And another reason to frown, Pacific Smile shares were down 0.8% at $2.55 after the company issued earnings guidance for this year. Australia's leading networks of dental centres expect patient fees of approximately $240.8 million, which is 29% higher than the previous year and at the top end of the previously advised guidance range. The underlying EBITDA has been pegged at $33.1 million towards the lower end of the previously advised guidance range, representing a growth of 41% on financial year 20. Well, it's time for another quick break, but stay tuned with 𝐊𝐶𝐼𝐴 TV. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐶𝐼𝐴 TV. Welcome back from the break. I'm Holly Shields and you're watching 𝐊𝐶𝐼𝐴 TV live from Sydney. This is our last show of the day, the last trade. We're looking at stocks that remained in the news today. Diamonds are definitely someone's best friend because the share price of jewellery retailer Michael Hill International rose 6.5% to 87 cents after the company reported its strong sales growth for the full financial year 2021. The sales rose 10% with the same store sales growing 8.6%, while online sales surged 51.1% for the year and topped the $30 million mark for the first time ever. Integrated Research jumped as much as 16% to $2.28 on a strong outlook. The software maker stated that it expects its annual revenue to be at the top end of a range announced earlier and profit to exceed the guided range. And I have an exciting new merger to report between 5GN Networks and Web Central Group. The merger will be implemented by the way of scheme under which the Web Central will acquire 100% of the fully paid ordinary shares at 5GN. Now to the final leg of our show, let's focus on the global equity market performance. Onto the Eastern Sphere now, and the Asian markets traded lower on Friday, tracking subdued cues from Wall Street. Taiwan's weighted stock index was the worst performer in the region, falling nearly 0.8%, led by a decline in tech stocks. Taiwanese chip giant TSMC fell over 4% despite reporting strong profits. TSMC is Asia's biggest firm by market cap outside of China. And Japan's Nikkei was down 0.5% as well, pairing more than half of early losses. China's Shanghai Composite was also down 0.2%, while Seoul's Kospi traded lower by 0.3%. Meanwhile, India's BSE Sensex traded marginally higher in the opening trade, but overnight, however, Wall Street ended mostly lower, as concerns about rising inflation kept investors cautious. In a choppy trade, the Dow Jones settled with 0.15% in gains, while the S&P 500 slid 0.33% and the Nasdaq Composite closed 0.70% lower. Choppy indeed. Well, that's all for now in the last trade. With our existing operations in Australia, New Zealand, the UK and Canada, 𝐊𝐶𝐼𝐴 Media has launched its operations in the US markets as well. Every day on our first show, the Global Market Updates, you can get our latest and most important news from the US, UK and Asia Pacific region. So on that note, I'll see you at Monday at 10 a.m. live from Sydney. From all of us at 𝐊𝐶𝐼𝐴, have a great weekend. Holly Shields signing off.